Tonight we're going to be doing a little bit different of a video, and we're going to go back to the basics here. I can't take for granted that every single one of my viewers or future viewers know everything there is to know about crypto as far as terminology goes. And let's face it, there's obviously terms that, we come across that we may be too embarrassed to ask because we have been involved with crypto for a while now, but for some reason we may have some, unclear terminology on what is what. So I wanted to make this video and go over some of the most commonly used terms and what they mean so that whether you're an experienced crypto trader or you're brand new to it, you can kind of hit the ground running with this. So this is Dirty Mike's crypto terms that you should know. So at first we're going to start with ATH, which stands for an all-time high. And that is the highest price reached by an asset, whether it be a token or a coin. The opposite of ATH is ATL, which stands for an all-time low. So that's pretty self-explanatory. ATH, the highest point that the coin has reached, and ATL is the lowest point. Now, altcoin is next, and that's a term that we hear very frequently. And an altcoin simply means all cryptocurrencies that aren't Bitcoin. And in some cases, Ethereum, just because, they are the two largest ones. But for this sake, let's say any coin that isn't Bitcoin or Ethereum is considered an altcoin. The phrase is used matter of factly to describe various other cryptocurrencies. All right, next we have Bitcoin maximalist. Now, we don't hear this term too much, but I figured we would just kind of throw it in here. A Bitcoin maximalist refers to a person who believes that Bitcoin is the only cryptocurrency of value, and therefore they don't believe that any altcoins have any value. Now, blockchain is the next one, and what the blockchain is blockchain, which consists of a series of blocks, is a digital ledger of all the verified transactions made on a particular cryptocurrency. Now, next will be the blocks. The blocks make up a blockchain, and each block carries a historical database of all the transactions conducted on a crypto until it becomes full. So blocks fill up and they build up the blockchain, and once a block is filled up, another block starts. So you have probably heard of that term before. Hopefully that clears it up a little bit if you are new to crypto. BTFD is an acronym for buy the fucking dip. And that's pretty self explanatory. This is used when a trader tells others to pick up a digital currency that has dropped in value. So if a coin is at an ATL, that may be a good time to buy the fucking dip. So that's a pretty good one there. A centralized crypto exchange, or CEX, is a crypto exchange in an online trading platform where cryptocurrencies and fiat money can be traded. Centralized means that the exchange is operated by a specific entity that maintains full control over it. Most of the crypto exchanges allow crypto to crypto trading only. However, the larger ones also allow crypto to fiat trading. The most popular exchanges are Binance, Coinbase, Kraken, Bitstamp, Bitfinex, Crypto.com. There's tons of them out there. Now, this is a term that's very popular nowadays, especially if you're involved with decentralized exchanges and decentralized finance, which is going to be some of the next categories. DApps. DApp is short for a decentralized app, meaning any practical application of blockchain and or cryptocurrency. DApps can take the form of mobile games, communications platforms, and social media sites. Next is a DEX, or decentralized exchange, and that is the opposite of a centralized exchange. And this is an exchange operating without a central authority. No company operates it. Some of the advantages of DEX over CEX are in its security level, and they are harder to breach, as well as the regulations. Now, next we have DeFi. DeFi is short for decentralized finance. DeFi is the movement within crypto to not just trade decentralized currencies, but to do so in a way that is itself decentralized. The most popular DeFi projects are decentralized exchange protocols, which automate the exchange of cryptocurrencies among buyers and sellers, eliminating the need for a middleman. All right, so next we have fiat. And you probably hear this term a lot. And fiat is just a term for government issued currencies like the US dollar or Japanese yen. In a broader sense, fiat is used to describe any currency controlled by a central authority. Bitcoin, in its decentralized design, serves as a counterpoint to traditional fiat currencies. Next, we have fork. And this is not talking about something that you eat your dinner with. A fork is when a cryptocurrency or blockchain based network splits off into two distinct projects with their own code and set of governing principles. In the event of a soft fork, only one blockchain will remain operational, whereas hard forks result in two brand new chains. For example, Bitcoin Classic is a hard fork of Bitcoin, since both cryptocurrencies run on standalone blockchains with their own sets of miners, nodes, and network participants. All right, next we have gas, and this is not referring to what you have after you eat dinner. Gas is the cost of computing power when completing transactions on the Ethereum blockchain, which gets passed on to network participants in the form of fees. Gas isn't just on the Ethereum blockchain, though it is on other ones as well. You can remember, especially in some of the earlier days of crypto, gas fees used to eat you up when buying and selling Ethereum. Since the Binance Smart Chain came out, though, fees have been dramatically lower as it has lower gas fees. Next, we have halving. Halving refers to one of the most anticipated events for Bitcoin. It is the process of halving the rewards of mining Bitcoin after around 210,000 blocks are mined. This usually takes around 4 years. Halving is to make sure that the number of Bitcoin in circulation does not increase exponentially. So every few years, the rewards are halved, and that will decrease the number of Bitcoin that are put into circulation and mined, so that it will not keep going up and up. It is halved. Now we have hash rate. Hash rate is the measure of computing and processing power used in crypto mining. The process of obtaining a cryptocurrency through powerful computers and specifically designed software. A higher hash rate indicates a more robust network. So hash rate is another term for the speed and the power, processing power used in crypto mining. Next is a term we hear every single day, and that's the hoddle. Hoddle is not a misspelling, it is a slang. According to internet legend, an early enthusiast's fingers slipped and he typed hoddle on an internet chat forum, urging his fellow investors to not sell. Today, when Bitcoin tumbles, loyal investors urge each other to hodl and not sell their tokens. The idea behind hodl is that Bitcoin's price will continue to rise regardless of huge dips. The phrase signals loyalty and belief in Bitcoin's ascent. So any token that you're involved in, if you believe in it, you're going to want to hodl it. Next, we have an ICO, or initial coin offering. And that's just how blockchain projects raise money and launch their virtual currency networks. ICOs exploded in popularity in 2017 and 2018 among the broader market frenzy. Many ICOs were classic pump and dump schemes. The Securities and Exchange Commission, or SEC, has sued many of them. Next, we have mining. Mining is a process through which new cryptocurrencies are minted. Many cryptocurrencies depend on a proof of work mining system whereby computational power is delegated towards solving complex math riddles as a way to simultaneously secure and power a network while also minting new tokens. Next, we have this was the term of 2021, and it's shaping up to be another one in 2022, and that is an NFT. So, what is an NFT exactly? And that is short for a non fungible token. And it's a digital asset that confers ownership of a virtual good, such as a piece of digital artwork or online collectible. For example, the famous He Bit My Finger YouTube video was auctioned as an NFT. Most cryptocurrencies are fungible, meaning there is no meaningful distinction between one coin and another. Bitcoin holders don't care which exact Bitcoin they're holding, whereas the holder of a LeBron James themed NFT will not necessarily assign the same value to a Kobe Bryant themed NFT. NFTs became all the rage in 2021, culminating in a $69 billion auction for a digital NFT artwork. Next, we have pump and dump. Pump and dump is a form of price manipulation where the price of a crypto is boosted based on false recommendations, and that's the pump before the assets are sold at a higher price, and that is the dump. We've pretty much, if you've been in crypto for a while, we've all been a part of pump and dumps. Whether you're in on the pump or you're in on the dump, you guys are definitely probably familiar with this one. Next, we have Satoshi. And Satoshi means one of two things. The first is in reference to Satoshi Nakamoto, the anonymous founder of Bitcoin, who vanished shortly after its creation, leaving the project to be decentralized and collectively managed. Satoshi also means a unit of exchange equal to 0.0001 bitcoins. The term is often used casually in the context of stacking sats or satoshis or buying more Bitcoin. Next, we have a stable coin. And a stable coin is any cryptocurrency or blockchain based token whose value is pegged to another source of value, typically a fiat currency. For instance, $1 pegged stablecoin is equivalent to $1. Stablecoins are commonly used to facilitate cryptocurrency trading and cross border finance. You guys know them as, BUSD, USDT. They are some of the, biggest stable coins in the world, and they are backed by real dollars, and they are always going to stay right at a dollar. And next we have a token, and a token refers to a unit of digital currency like Bitcoin. You hear this next term all the time, and that is to the moon. If someone says to the moon or posts a rocket emoji, it means they think the price of a cryptocurrency is going to see a huge increase. Next, we have the term rekt, R-E-K-T, and rekt is a crypto slang for wrecked. It's pretty self-explanatory. This is used when a trader loses a substantial amount of money. We've all been there, and I think most of us at some point or another, if we've been in it for a while, have been wrecked. Next, we have the two kinds of wallets that are available. And a wallet is a cryptocurrency wallet and similar in function to a physical wallet. It's a place to store your tokens, but not all crypto wallets are made equal. Hot wallets are online, meaning crypto tokens are easily accessible, but also more susceptible to hackers. A cold wallet stores digital assets offline, making them secure from bad actors but difficult to trade. And lastly, we have a whale. Whales are individual investors and often sophisticated trading firms with large amounts of Bitcoin and or other cryptocurrency. Whales are feared and respected among crypto day traders for their ability to move prices with single trades. Whales include the present individuals who bought Bitcoin in its early years and never sold. I know a lot of these terms are just in terms of Bitcoin, and I did that on purpose, just because, if you're new to crypto, that's going to be the one that you're the most similar to. But you can be a whale in any coin or token, and that simply means that you hold a very big amount on it and you're one of the biggest holders on it, then you are a whale. So I hope you guys enjoyed this video and found some use in it. And whether you're new to crypto or you've been in it for a while, you may have heard a term today that you may not have known the exact definition of exactly. So I hope this was of some benefit to you as well. But this was definitely geared a little bit more towards newer investors that may just be getting into the crypto market. And they're the future of crypto. We want more people to be getting involved in crypto and learning all the terms and not be as intimidated by them. So, if anybody has a question in one of the chat rooms, guys, make sure you go out of your way to really help them out to explain it to them, because the more people we explain and make crypto easy for, the more investors we're going to have. Well, I hope you guys enjoyed the video. Make sure you hit that like and subscribe button, and I'll be back with another video shortly. Have a great night.